All right, let's jump into things. Where we are, this is a weekend review, weekend wrap. It's 11 o'clock on the Sunday night, so a bit of a busy weekend. I only get into the analysis now. But look, the main sort of thing obviously is just get the sort of stuff done before markets opening on Monday and that. So just got a bit of an idea about how things finished up, and sort of new potential sort of setups or sort of news where we can sort of use to work with sort of come through the week. Look, I'll start off with just what we do have coming up on the economic calendar. Look, Monday's looking like it's pretty quiet, so to start off to it all. So nothing really majorly of note coming through here. Move through. Look, a couple more Fed speakers. There was a number of Fed speakers toward the end of last week, which I'll sort of cover a little bit more when we sort of have a look at DXY in a moment, just because obviously we got the breakout and we're structurally retesting that breakout point, and that sort of those bits of those people Fed talk speakers could have been something sort of driving the little bounce that we had, but. Yeah, we'll get to that in a moment. So, look, Monday's looking pretty quiet. Tuesday's pretty quiet until we get into the US session. So, not really anything through Asia. You got Claremont count again, GBP pairs kind of thing. So, a little bit of a tick up with their employment numbers. But also you're looking like unemployment rates ticking up there a little bit as well. So, probably around that sort of mid 4.5%. Like I don't really sort of cover it so much, but I think it's sort of if would be a bit of a universal sort of thing around 4 to 5%, sort of high fours, around 5%. These kind of numbers generally not seen as a great thing, of course, and probably it leads more into the camp of possibly sort of cutting a little bit more, or being more on that sort of okay, maybe not say cutting, but more on the dovish side of things. Obviously, you just don't want that employment to sort of continue sort of progressing too much. But main one that we're looking at here is CPI, and so CPI looking to be fairly flat coming through this with a headline figure on that year on year, and then the month on month looking to tick up both of these ones here. So the headline one is the one that sort of people generally reference the most. You've obviously got the core, and then you've got these month by month ones. So obviously showing a bit more of a you know, more recent sort of direction of what we could be expecting with CPI. And of course, the two things, the dual mandate that they're trying to sort of balance is, I mean, obviously sort of keeping the economy sort of ticking over, and obviously sort of avoiding recession, getting those sort of like keeping that sort of those production numbers up as well. But obviously the other big side of it is the inflation, the CPI, and 2% is the target, 2.4. How's it looked more recently? So relatively flat. So it is actually sort of moving down. So holding flat around this sort of mid twos. You obviously saw a little bit of a spike up in Feb, back up to 3. Um, Look, I would say if this, you've got two sort of things with this. If it comes in at 2.4, I don't think it's going to be sort of like alarm bells. But again, you're going to see a lot of them, sort of a lot of the headlines of people talking about, oh, it's sticky inflation. If it's not moving down, well, they're raising rates isn't on the table. So it's, you've got your two sort of directions that they could be looking with things, and obviously one being holding and the other one being sort of cutting. Powell the other day said very much that they're in no rush to be cutting. They want to make sure that so obviously that sort of the other side of the things, the economic data, if that gets like more sort of extremely weak, that's what they're kind of looking for. What the thing is that like you just don't want to see you doing that at the cost of inflation going up. And as you can see, the month by month here, both of these are ticking up. So I would say that it's most likely if this comes in 2.4, or obviously if it comes in above, it's going to be sort of US dollar strength. And these are the little bits of people like CPI I kind of put as a second tier bit of data, probably equal to the sort of NFP in its kind of reactions and how it can affect the market. Certainly it can be a big mover as the number drops. Maybe not so much now as it was, say, 6 months ago, but certainly it's a big part of what they plug in my opinion, as to sort of building that idea about, are they going to be a bit more dovish? Are they going to be moving towards cutting? Certainly, if this goes up, it's going to be seeing, okay, well, there's even less chance of them sort of having a bit more of a dovish approach, because you've got the economic data that's not slowing down. That's one side of it, and then you've got inflation that is going up. Those two sort of sets of data and figures coming together, that leads to sort of higher for longer kind of thing. So no rush, as Powell said, to sort of to cut the rates. So that'll be sort of the big mover come earlier the week. Ticking through Aussie, we've got wage index, not really a big bit of data. They have sort of ticked this one as a high impact. It's not something that I would really sort of be looking at a great deal, sort of like, to sort of have a big impact on the market, so to speak. 45 days, early indicator of consumer inflation. Yeah, again, it was just like we covered the other day. It's just labor costs. So all these sort of things, again, you're just plugging it in. So it's up the stream, so to speak. So you've got, actually sort of the actual sort of manufacturing, like the stuff to make whatever it is that you're producing. But then obviously the other input on that is your labor costs, your wages as well. And if they're going up, I mean, it's only a slight little tick up. As I said, it's not really something that I pay super close attention to. But of course, if that's going up, well, it could lead into the idea that, okay, we got to address that as well, because that can obviously then lead to higher sort of CPI down the track, but not a major one that I'll be sort of looking at here. Rest of the session, again, not a great deal, not a great deal. Unemployment changes back, and they're back to their 20K spams. So I do this every month. Which is the one here? No, this one is the one that'll show us they sort of like 20K, 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 and the one or two times that they've gone up, well, they actually got a little bit closer last time. Forecast 39, and they got 52. But yeah, they went from 30. They sort of go, okay, let's put it up a little bit, and then it went massively down. So yeah, look, we'll see how we go with the numbers here. Stronger numbers are going to be better for the Aussie. Weaker numbers, so where we at? So actual 32, expected to sort of tick up. So, it would be seen as something kind of positive if we do. Oh, sorry, no, what am I talking about? That was last month. What am I talking about here? No, no, no. Yeah, okay, scrap that. As I said, this is why it's better to do the analysis a little bit earlier. 32 is previous month. We're looking at 20.9. So should it come in this? I'll just preface this by sort of say I have very little faith that they've got this one correct, because they spam 20K most of the time and get it drastically wrong. But should we see a lower number, this is going to be weighing on Aussie. And I'll reference that again as we look at the Aussie chart, because it's in quite a sort of precarious kind of position at the moment. It's holding in there, but it's certainly got some pretty clear lines underneath it to sort of be watching for any potential sort of breakdowns. And as I say, could be looking at lows sub 62 with that. Moving forward after this, so that's pretty much. So it's not massive through the start of the week. We've got obviously CPI is going to be a big one there. You might get a bit of movement off this employment numbers and that from Australia. Generally fairly short-lived. It's not going to be something that defines the whole thing, but it's up there. Then we got PPI and retail sales over in the US. So retail sales looking to slow down, and PPI, so that's Producers Price Index. Again, so the same sort of thing. If we see the numbers are ticking up, it's going to be more strength for US dollar in that kind of area. And then we got Powell talking on Thursday as well. So a couple of bits and pieces that learned through the week. And then moving through Friday, pretty quiet. We got this consumer sentiment and inflation expectations to finish things off super late on the Friday, Saturday morning. So a couple of bits of data. Main ones obviously being the CPI, and then sort of PPI retail sales and that sort of later in the week, but pretty cruisy for the Monday. All right, let's tick along to a couple of the charts. We'll start off with DXY here, because this is obviously, well, we start off on a broader census on our weekly. We did get a little bit of a pop up through this zone here. So it does look like he's trying to sort of like slowly move around with it all. Would have liked to see something a little bit stronger with the close, but at the moment it's oversold down here. It's moving up, so it's definitely got room if this should sort of continue, but these are kind of little stepping stones. It's not full conviction on these kind of moves. They're very much up. And if we have a look on it, so let's jump onto that on the chart here. So as you can see, this is the big area. There's 100.4 is what we were looking for throughout the week, or last week and a bit actually. I've been called 104, and it got the pop, it got the big breakout in that. So look, it did move forward on Thursday. Friday was a little bit of a cruisier kind of session. We get right down onto the lower time frame. It did have a little range up the top over here. And it did sort of attempt a couple of times to move up, sort of like break out of this little range it did have. But if you actually sort of trail this one back, you can see we did have a gap that we had sort of back in, sort of start of April. Yeah, sort of start to middle of April. And pretty much as soon as it had closed this gap, also on a higher time frame, you can see it pretty much use that to sort of sell down, and they smacked it down. But it is pretty much what we were kind of like. This is the path that I was expecting with it. We are in that technical backtest direction at the moment. So this little falling resistance through here, this is what we referenced the other day. Every time it had come into contact with this line, it had been hammered, absolutely hammered and hammered. It broke through, and now it backtested the top side of it. It also gave us a chance to do a proper backtest of this, 102 to 104 kind of resistance area that obviously, was quite a strong area here. So this is what you want to see with these kind of areas. You want to see that, as the market comes back down into it, it starts to get bought up there again because, as I said on Friday, a lot of people be shorting this thing, shorting this thing, shorting. They've done very well with it all. Eventually, if it's going to pop through and it comes back down here, well, you've made money, made money, made money all the way through these ones. You're going to sort of go, okay, well, you know what, maybe I can just get out for zero now. This time it didn't get sold down. Tried to short it again here, popped up here, back to zero. Okay, I'll get out. And as they sort of start to get out, well, obviously closing your shorts, you've got to buy back the positions, and you start to see it drift up here a little bit as well. So the three sort of parts with these breakout moves are one, obviously the breakout. That's fine, we've done it. Back test, that's what we've got at the moment. Now we want to see a higher high. So let's just put the alert on this line here. And let's put it high after breakout over 100.4. That'll be pretty much our sort of confirmation that we're probably going to be moving up. And next targets we're looking at is kind of 101.4 and then probably up around that sort of 102 area to sort of see what the market can do. And I do think, excuse me, I do think we'll get reactions at these levels, similar sort of things with these. I think sort of, should we get up into here, we could see a bit of a pullback, pushback with it all. But I don't see this necessarily as being the top. Like we've tipped here, we've done all this effort to get out of this lower zone and consolidated for a couple of weeks. Finally broke through after numerous shorter sort of time frames sort of failed events. Bias moving up, breaks it down, bias moving up, breaks it down. You've done all this effort to get out here. Is it just to close the gap and that's it? And now it's boom back down over here. Well, I mean, obviously we've got to wait and see, but we are in that backtest mode at the moment. Higher high after the breakout, that's what your confirmation is. Should it start to dribble and come back down to these lower levels, doesn't mean it's necessarily dead till we see these buys at sort of like 99.2, this level here. If we see that go, well, that's it. And bang, failed a breakout attempt and probably going to go a lot lower there. I don't think the lows down here are going to hold it then. But I would say that most likely we've got this move coming through here. Should we start to see, as I said, like, bits of data like the CPI coming in a little bit hotter, well, that means that it's most likely got to be in the sort of favored sort of USD strength camp. So which could be the thing that gives you the drive and pushes through the top side over here. There was a little bit of sort of news over the weekend with China and the US having discussions. And of course, I mean, you take these things with a grain of salt with Trump's tweets afterwards. He's always like, it was a great meeting and it was, it was the best and all this sort of stuff. And look, that's fine. See how they go with it all. But I think sort of anything positive with that at the moment, it's going to be good for China. And this is where things are getting a little bit sort of tricky because any sort of progression in that kind of thing is going to be good for China, but also going to be good for the US dollar. And I think the US dollar has got a lot more to be gained. It's a better risk reward buying something that's like, potentially breaking out from the lows, even if it's just for a medium term trade. I think that's going to be a bigger beneficiary of those trade talks than the yuan will be and China. So I think sort of like obviously how that may sort of impact Aussie is obviously something to keep in mind as well. But I think any sort of progression, positive stuff moving forward, that's probably going to take a little bit of the wind out of the sails of gold. It gives, okay, well, you know what, US hasn't blown up, we aren't in a recession, all this stuff, yada yada. Well, maybe that's a reason you can buy it a little bit more. You've got inflation creeping up, maybe you can buy that. You know what I mean? I think it's just everything is pretty much back up near its highs, within a couple of points, a couple of whiskers, that kind of thing. But US dollar is way off its highs. So should this thing start to move, I think a lot of the people are going to say, even if it's a medium term trade, I think there's definitely potential for this to squeeze up a little bit because we are really, what I mean, right down coming off the lows. And it has worked a lot. It's had many, many attempts or chances, possibilities where they could have just run this down and broken it down and gone down to these lower levels. As we can see, like, there's a small little failed move ups where we go buys, 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 bang, boom, down. But as you can see, buyers are still progressing through here. So if we see that the buyers move up and then say hold this area through here, well, obviously we're starting to see things start to sort of move up a little bit higher, and the pressure's going to be put on the sort of like basically any other shorts or anything on the other side of the trades, should this thing start to keep moving forward. So what I'll be looking for is obviously if this thing doesn't sort of just run straight early, you want to kind of hold these lower levels down here. So I would want to see it stay above 100 really. Look, not to sort of say that it can't come back. I mean, as we've seen, like the pullbacks on these things are very deep. You know what I mean? 78% pullbacks each time, and it still moves forward. So it's not like okay, if it does pull back down deeper, it's dead. As I said, underneath these lows, if we see the buyers are moving up here, but then all of a sudden it gets down here, and we see a lack of buyers at this level, that's probably when you got to see things move down there. So I think you've got a bit of room to play with the US dollar. You've got some data in that that's looking like it's there to support it. You just want to see the actual flows in the chart show that as well. And we get that by putting in a high from this breakout move. And then we look for these higher levels up over here as a sort of more immediate kind of targets. So yeah, look, through Asia, not really much in terms of news and that to sort of drive it, apart from those kind of headlines over the weekend. But I think sort of come Tuesday, so maybe a little bit of a fluff around, maybe come Tuesday night, obviously we've got CPI then, we might start to see things tighten up a little bit. But I think pretty much if it doesn't break out early, maybe look for a range up around the top over here, but you just want to stay above this breakout point here at the moment. All right, move on. We got Aussie, and Aussie sort of came down, hit that first sort of point of interest that we were looking at. So, I mean, we had that little three drive that failed. Three drives they're always a little bit hard to sort of pick sort of where you're going to put your sort of price target from it all. But I've just been playing around that last drive up, which is obviously this one here, not including the wicks. Pretty much got filled down to the bottom over here, which came in line with these supports down over there. You could probably almost, if we drag that up and take the wicks, you can see that pretty much filled there as well. So I think it's just better with these things, at least my experience, what I've seen more recently, just to ignore those last couple little points, do your measured move just with the bodies, and then go there, because that way you definitely know you've got a fill. You're not trying to squeeze out an extra point or two down here and then miss your target. But we did see as this sort of came down, tried to do a little bit of a back test, and then bang, got slammed right down there. So it came down, buyers stepped in pretty much where we kind of thought it would be. Bang, there they are. And that's why we had point of interest here. Look, I do think that we could potentially see at least an attempt down towards this sort of 63.80 level. Underneath there, we've got this kind of lower support area with these wicks around that sort of 63.50. But I think the main one that we're really kind of looking at is down here. I think that is kind of your make or break line. Because I think if you go down under here, this is like your last little support from this move up over here. I think once you get down under there, well, I think you are sort of kind of moving down here. So I covered this the other day. Fast move down, relatively fast, kind of just one-way trade up through here. And by that, I kind of mean like it's not like you're doing this, which is a healthy kind of, well, healthy, a somewhat exchange of buyers and sellers moving up and down, back and forth, this kind of thing. This thing kind of just, maybe everyone was like, well, not everyone, but like, people shorting this thing, shorting it, seeing it got down underneath 60. they've just kind of gone up and grinded it, and sort of even along here, this came up to sort of like 5 month highs, but as we just sort of covered, didn't hold it. So a failed breakout is kind of pretty much, well, it's not pretty much, is what we got. And as we know, sort of failed breakout can be as good as a breakout, really, and that can be leading to a breakdown. So there's a couple of levels of support through here. As I said, you got obviously the wicks around there. It's sort of 63.70, 63.80, that kind of area. Underneath that, a smaller little area at the 63.50s, where we've obviously got these other previous wicks, bottom of this kind of range that we got here. But as I said, I think this is going to be the one that's really paying attention to. So should we get a little bit of an early sell down through here? Look, it's two touches in quick succession. If you see the lack of buyers, they're the levels to look for. I do expect this one to hold, at least on the first attempt, but maybe if you do get that sort of stronger CPI or a hotter CPI number, that could, and if Aussie's down in this kind of realm at the same time, so if it's about 63.60s coming into that CPI, and then you get a hot CPI print, if DXY breaks out, gets that higher high, I think that's the same time that you're going to see Aussie break down. And as I said, I'm pretty much looking sub 62. I wouldn't mind buying it down here. We do have a little bit of support from previous levels, starting a couple of months ago or whatever. But I think that will hold a much better sort of risk reward from this level down here, around that 61% retracement of the sub 60 move. But to me, it kind of, that failed breakout's a big warning sign. Confirmation is just down the bottom, out the bottom here. Okay, just in terms of that as well, sort of covering if we do move up a little bit high, look, you do have areas in which, I mean, we did see a reaction here. As you can see, buyers were holding this all here. Look, I think really if you get above 64.50, maybe you could say that, hey, look, it's bouncing back out of here. But at the moment, I think the pressure's on to the downside. So pretty much, if US dollar does break out and run, that's going to be pushing it down. As I said, I think like that China talk and all that kind of stuff is going to be more beneficial for the US than it will be for China. And obviously, if China's broken down out of its range, we did a fake breakout basically to the downside of its range, coming back into its range. That means the yuan's going to be weakening a little bit, and that's going to be putting a bit of pressure on the Aussie there. And pretty much at the moment, they're still pricing 5 cuts or something towards the end of the year, 4 cuts for the RBA. So whether they do that or not, well, yeah, it always remains to be seen, but that's what the market's, the chatter, the talk is. And so if you've got, particularly in this instance, you've got US on one side, the Fed on one side, and then you've got Aussie RBA on the other side, you've got the Fed looking to hold potentially, and then you've got the RBA looking to cut. Well, that's going to be pushing things down as well. And as I said, if you've got these three things, like this can obviously change. And this is just my sort of analysis and take on it. But should these things change, okay, we'll work with that then. That's why we do daily analysis. But should these three things eventually play out, and we see that breakout on US dollar, we see the yuan weaken and RBA not change their kind of more dovish tone sounding, we're going to cut 4 times between now and the end of the year, that's what's going to break Aussie down, in my opinion. And that's we're going to be confirming that underneath 63.20. Cool. Move along. So we got gold. And gold is just an absolute fickle beast kind of thing. It is look, it's breaking. It's not breaking down, but look, it has technically put in a lower high now. So with all these things, you got to sort of always sort of tell you, okay, work out what leg are we in, and this is why. You say to some people, look, it could be going this way, it could be going that way. And it does sound a little bit like, well, pick a side, whichever way you're doing. I think gold's going to come down. Okay, that's the side that I'll pick. But the thing is, obviously, as you can see, even as this thing was coming down, broke new lows, well, there we go, it just jammed up $200. So, people that sort of go like, oh, it could go up, it could go down, oh, you know what I mean? And then sort of like, this is what trading is. You got to be able to sort of see where you can trade. And particularly with me, I'm a short-term trader. So, I mean, I'm happy to go in and out of stuff. But if we were to sort of look at the two sides of things here, I mean, really, we came back down here, we found support. We had leg up, came down here, found support, moved back up. This leg here was targeting to give us a double top, higher high or a lower high. I'm happy to sort of, well, I'm happy in saying that I sort of think that that is a lower high, which we've now locked in. Like it's not as if it sort of pulled back here a little bit and then it could still be going. So I'll play this out in a moment, but this little area, internal structure of this move, oops, this is why I confirm it, because in the internal structure, you've got to move up, found support, tried to come up, failed, went out the bottom side. So this internal structure is now breaking down, which then confirms lower high on the bigger structure. So now that we're sort of like pulling back down here, okay, we found some bars, you got to sort of think, is this a larger move to do this, find support, and then do this? Is this going to be coming up here to sort of target these levels at sort of, 34.20s, or is this really just sort of a pullback? We found support, found resistance. Now we're moving this way and we're tackling this one down here. So I'm pretty much looking for a move down towards, 32.80, this kind of level here, and see what the buyers are doing there. You break through there, well, you continue the move down here. We can sort of look, we've got a little bit of support at 32.60s, but realistically, what I'm mainly sort of looking for is the test of 3200. That was the lows that we had before we had this last big push up over here, because that structurally then will give us move up, move down to target the lows, moves down, that resets the whole structure, and then we move up, and then we move down again, and we sort of look to see what it can do there. Look, it did bounce a little bit off this move, as you can see, coming into the last couple of hours, and I always say that I don't really sort of consider the last 4-hour candle a great deal, sort of coming into the end of the week. We had a little bit of a wedge setting up here. If you get onto a lower time frame, whoops, where do we have it? This one here, we had a little bit of a wedge setting up, and obviously got a bit of a bounce out of here. But this move coming out of it, to like this direct move out, okay, that was a bit of a pop, but this doesn't show crazy conviction in my mind. I mean, if we look at sort of how this thing's been moving, look at these moves up over here. There, it's had a couple of little bits of grind and that, but bang, bang, this one's going straight up. Or the previous kind of moves over here, where it was just straight up, straight up. This, to me, looks a little bit wish-washy. Plus, as well, you sort of sold a little bit of sort of selling down. But again, that's coming into the weekend. People may just not want to hold those positions into the weekend. So look, it is trying to grind up here a little bit, but my focus is probably more to sort of see what happens at, say, 33 or 32.80, 32.90 to see if we can break this level. If we break this level, then I think we're looking at 3200 as the next stop, and that'll be the major level where you want to see are the buyers going to be there again and be able to push back up. I think if you do get back, if you're looking for top side kind of stuff, this is where you'd really want it to get above. You want to see it above 33.70. 33.70 means that this is kind of just a bit of a shakedown, and then you back up into this range. Then you're dealing with the top side of that previous range, boom, moving up and so on and so on. But to me, this doesn't sell it as like the crazy buying that we'd seen previously. Maybe just a bit more of a correction, sort of coming into the end of the week kind of thing. So as I said, I'm looking more downside here to see what happens with the buys at 32.80. Tick along, we've got silver, and silver, I've covered this a couple of times real recently, and it is just chopping around. So we know where the buyers are sitting, down this level over here, and this is what I was saying, that look, if we can see a kind of move up towards this level here, and we see the sort of sellers come in at 32.80 or so, along this sort of falling resistance here, the target's still to get through this 32.20, but I think underneath 32.20, realistically, you're looking down at least 31 for a deeper sort of pullback. But it's really just this sideways churn at the moment. So I'm not a big fan. I don't actually have such a strong sort of conviction on what's happening with silver. We can see actually this little horizontal here where we had sort of buyers, sellers, buyers. You can see that this has been a bit of a little swing point up and down here. So above, look, really above sort of 33.30 would give me a bit more conviction that this is going up higher. But I do think the pressure is more on the idea to sort of just, as you can see, like, you've got a pretty solid straight line here, horizontal line, sorry, and you've got the sellers coming down, pushing down, pushing down, pushing down. I think if we come back to 32.20, that'll be the time we pop through, and they're the levels that I'm looking for underneath, sort of 31.40, and then sort of 30.50. Cool, and copper. So copper was one where we had the breakdown, that grind up, which I was like, oh, it's a flag, it's a flag, no. And then another great sell down here. I actually got out of my last copper positions down here. So I did quite well down here, got in a little bit early here, got churned up and cut up a little bit, got off it, got back in somewhere down, moving down through here, and I got out over here. So I didn't actually see this spike till sort of later on. This was around the start of Europe on Friday. I'm not quite sure what was the big driver with this one here. I'll have to have a look into that. But as you can see, that's a big spike up. I mean, that's so 5% in 1 hour. There's got to be a driver for something with that. So where it's at the moment, obviously this is held. So you've got your buyers down here, you've got your buyers down here. This is basically just turning into a large range here. So you can just do this and say that's pretty much what you're looking at to give yourself a direction. I think below, 4.8 or above 4.8, kind of 480. I think that's the kind of area there. So you move up to the top side here, try to sort of short it, sell it, and sort of see that sort of move back down to the bottom side over here. Should we sort of get back above this bounce high, well, then it's probably going back up to test these highs over here around that 490. But I do think that, with US dollar potentially sort of moving up, I think that metals are going to get knocked back a little bit here. Cool. And finally, just sort of finish off with USD, China, yuan. And this is what I was saying, that we had this kind of, where we go, false hour here, this kind of bounce move back up here. And this is what I was sort of saying about that sort of negative divergence. Like, it isn't technically a negative divergence because this wasn't a lower low. But as you can see, the reaction over here and to come back up, while, as you can see, the RSI was just really ripping up to the top side, you can see the reaction afterwards, and it's obviously sort of come back up. So it's now back up inside its main range. Drop this on daily, you can see it. And this really is just looking like more of a sort of a failed breakdown. So back up into the top over here. So back into these kind of levels that I'll be sort of looking for. Should I drag this one across over here? Probably the sort of completion of this body fill up around sort of 7.27. I think that'll probably see a little bit of selling action again there. But if this is moving in this direction up to the top side back into this range for now, you've got the RSI to support it. This is on the daily. I think this is going to be, you know what I mean, sort of something that could help push Aussie over the edge, particularly if we see US dollar buying across the Asian currencies as well. I think that's going to put the pressure on Aussie as well. So I think we have some upside here, which would go in line with probably a little bit of cooling in gold, and also a breakdown in Aussie. But that's what I'll be looking for. So just a bit of a quicker one now, because obviously end of the week, Sunday night, need to get these things done a little bit quicker. But pretty cruisy through Asia tomorrow. CPI is going to be the first one that's going to really give us that picture. But the main thing is the higher high. If we get that higher high on DXY, I think a lot of these things are going to start to crack around the same time as well. That's it from me.